What's up, everybody, and welcome back to another episode of the True Success Podcast. I'm Dan.
And I'm G2 Jake.
Our goal here is simple. True success isn't just about stacking cash. It's about building a great lifestyle, having the money to fund it, and the part everyone forgets, protecting the time to enjoy it.
Exactly. Our formula is a great lifestyle plus money multiplied by the time to enjoy it. Too many people spend decades worrying about the size of their accounts without ever stopping to ask if they're building a life they actually want to live.
Spot on, Jake. And that's why our motto at WMGNA is we figure it out so you don't have to. We unify your financial life so your money stops pulling you in 5 different directions.
Speaking of pulling in different directions, let's talk about everyone's wallet this summer. You hit the gas pump and the register just keeps ticking higher and higher. You walk out of the grocery store with three small bags and suddenly you're down 200 bucks. Mortgage rates are being really stubborn, and now the federal government is rewriting the student loan rulebook again. It's a coordinated hit to the household budget.
But here's the reality. We can't control inflation. We can't control the Fed. And we definitely can't control Congress. But we can control how we respond.
That's the dividing line right there. Winners adapt and everyone else just plays catch up.
That's exactly right. Some families simply absorb every increase. They pay higher insurance premium because they never shop around. They keep cash sitting in accounts earning almost nothing. They overpay in taxes because nobody is looking ahead before December 31st. Then inflation shows up and suddenly they feel squeezed from every direction.
And the interesting part is that this isn't just happening to middle class families. We see high earners every day making $300,000 to $400,000 a year who are feeling the struggle just as much.
Every single day, when we run a WMGNA cash flow audit, we almost always find thousands of dollars a year slipping through the cracks in structural taxes, bloated insurance, and unoptimized debt.
And I want to make this really clear. We aren't telling people to stop buying their morning coffee or cancel that family vacation because that's not really what moves the needle.
Exactly, Jake. Financial planning shouldn't feel like punishment. The goal isn't to pinch pennies and lower your quality of life. The goal is to only pay for what you need so you can spend more on the things that actually matter.
And speaking of things getting more expensive, let's talk about housing for a minute. It seems like every conversation I have with someone who's thinking about buying a home starts with, I'm just waiting for the rates to come down.
I hear that almost every day, and I understand why. Nobody likes the idea of locking in a mortgage north of 6.5%. But I think people get so focused on the interest rate that they forget the bigger picture.
The bigger picture? What do you mean by that, Dan?
Well, funny you should ask, Jake. Buying a home isn't just an interest rate decision, it's a lifestyle, cash flow, and liquidity decision. If you found the right home, you're financially prepared, and you expect to stay there for several years, waiting for rates to drop isn't always the best strategy because nobody knows where rates are headed.
Exactly. People act like there's a giant sign somewhere that says mortgage rates will be 5% by next spring. The reality is nobody knows. And if rates do come down, that's great. Then you may have the opportunity to refinance. But if you're waiting for the perfect rate while home prices continue to climb, you may not actually come out ahead. People see the 6.7 or 6.8% and immediately decide it's a bad time to buy without looking at the opportunity cost.
That's one of the biggest mistakes we see. You have to compare the total cost of owning versus renting, property taxes, maintenance, insurance, those pesky HOA fees, if there are any, and even the opportunity cost of your down payment all matter. Sometimes buying clearly wins. Other times, renting for another year or two while investing the difference makes more financial sense.
Right, right. So it's less about trying to win the timing game and more about making the decision that fits your overall plan.
Exactly. The house should fit your financial plan, not become your financial plan.
Let's switch gears to student loans because another round of changes just happened on July 1st. And I think a lot of our borrowers have almost become numb to the constant updates over the last few years.
That's true. Every time people think they've finally figured out the rules, something changes again. But that's exactly why it's important to reassess your payment options instead of assuming your current strategy is still the right one.
One thing borrowers should review is how their auto pay benefits work. Depending on the loan type and your repayment program, some interest rate discounts may work differently than borrowers expect. It's worth confirming everything is set up correctly because some repayment plans got a recent upgrade to 1% discount for auto pay, which is huge. But you must enroll by September 30th to lock it in.
That sounds simple, but a lot of people just assume everything's running on autopilot. Also, the SAVE plan is being eliminated, which you have 90 days to pick a new one, or the government will enroll you in the least flexible option.
And to add to that, there are new caps for Parent Plus and graduate professional loans. So you may have to explore private loans or scholarships to cover the gap. It's kind of like reviewing your investment portfolio. Just because it's the right choice 3 years ago does not mean it's still the right one today.
Which leads me right into bringing up that another area that keeps expanding is 529 plans. I still think a lot of people only think of them as a college savings account. They've become much more flexible over the years. Depending on your situation, they may help cover a wide variety of qualified education expenses that many families realize. For some people, they can even play a role in broader family wealth planning.
That's another reminder that tax planning and financial planning really are not separate conversations, which is probably the biggest takeaway from today's episode. Inflation affects your cash flow, mortgage decisions affect your long term wealth, student loans affect your taxes, your savings, and even your long term wealth trajectory. These aren't isolated decisions, everything is connected.
Instead of looking at one piece of the puzzle, you're stepping back and asking, how does this decision affect everything else? Whether you're a high income professional, a middle class millionaire, or a business owner, there are usually opportunities hiding in plain sight. Sometimes they're tax opportunities. Sometimes they're investment opportunities. Sometimes they're simply better financial decisions that can put thousands of dollars back in your pocket.
Because at the end of the day, that's what people want to achieve. Not just more wealth, but more confidence, more flexibility, and most importantly, more time with the people they care about.
Exactly, Jake. That's what true success is all about. If you enjoyed today's conversation, be sure to subscribe, leave us a review, and share this episode with someone who's feeling the summer money squeeze.
And if anything mentioned today made you think that you need to take a look at what you're currently doing, we'd love to have a conversation because we figure it out so you don't have to.
Thanks for listening, everybody. We'll see you again in a couple weeks.